Good morning, traders. Good morning, traders. Today, the time has come to reveal to traders how do Forex professional traders trade. How do Forex professional traders trade? All right, very simple. So, if you have been trading Forex for some time, you will know that it's not easy to trade Forex. It's quite challenging to day trade, to swing trade, and to position trade, okay, in the Forex market. One of the reasons why we find it quite challenging is because when we are talking about Forex traders, Forex professional traders, they are very smart. In this tutorial, I want to show you, okay, just few tips that you also can apply, okay, like the professional Forex traders. You will have a bit of idea about how the professional Forex traders trade, all right? So for this demonstration, for this tutorial, I want to use the New Zealand dollar, Canadian dollar. I'm on the yearly chart. Before we continue, I want to say to traders, I personally, George, okay, I do not trade any financial instrument if I cannot see the yearly chart. All right, so this is it. I'm telling you now, it's up to you what you think, because a lot of traders, when they are day trading, swing trading, and position trading in the Forex market, they only look as far as the 4 hours time frame or daily chart or sometime weekly chart. I recommend to traders to check the yearly chart, all right? Why? Because the Forex professional traders look at the yearly chart. All right, so you want to know, so it will be, do you think that it is okay, nice or okay to know how the professional Forex traders are trading? You want to, will it be good to know, okay, where the professional Forex trader are likely to enter a trade or are likely to exit a trade? All right, that would be good to know, all right? Because when I start trading Forex first, I will have been slapped, do you understand? Slapped many times by the professional traders. All right, you understand? Which means I have been fighting with the professional trader that has been slapping me, so to speak, all right, losing consistently. And then I ask the right question, how do the Forex professional traders trade? All right, they trade around key levels. So at the beginning of each year, each professional traders want to know, all right, four specific key level. All right, it's so important. So if you are in the Forex market doing your own thing, I want you to start today changing your method of trading Forex, so you may start, okay, learning from the professional Forex traders. 4 key levels at the beginning of each year. Those lines will stay on their chart, and they want to look for trading setup around those key levels. They want to know, they want to enter the trade around those key levels. They want to exit the trade around those key levels. So in this tutorial, I don't want to keep it too long. I will go directly to the point. The 4 key levels that the professional Forex traders are looking at are the high of the previous year. So you can see that the candlestick bar, can you see the candlestick bar? This is a doji here. All right, because I draw lines on my chart, you cannot see clearly, but this is a doji here, a doji candlestick bar. So professional traders at the beginning of each year, they will draw the high of last year, which is the pink line here. So this is last year candlestick bar. I'm on a yearly chart. Have you ever seen a yearly chart before? If not, put it in the comment section, all right? Does your trading platform allow you to see the yearly chart? Put the comment in the comment section, all right? Now, if you are wondering which charting software I'm using TC2000, okay? TC2000, the gold version, all right? So the first key level that the professional will draw on their chart for Forex traders, they will draw the high of last year, all right? They will draw also the closing price of last year. See, that's the red line here. They will draw the opening price of last year. And they will draw also the median line of last year. And they will draw the low of last year. Is that 4? 1, 2, 3, 4. It's a 5 key levels. Talking about the median line also, adding to the 4 key level is 5. All right. So the high of last year, the low of last year, the closing price of last year, or the opening price of last year, the closing price of last year, and most importantly, the median line of last year. To draw the median line, you can use Fibonacci retracement by putting Fibonacci from the low to the high of that candlestick bar, and then you want to draw the 50% Fibonacci retracement level, which is which is the median line, of that candlestick bar. All right. So on my chart here, the 50% Fibonacci retracement level is the median line of last year. All right. So those are the 5 key levels that the professional are watching at the beginning of the year. So the next thing that they will do, if they are day trading, they want to day trade around those key levels. If the price is in the vicinity, is near those key levels. But a lot of professional Forex traders are swing traders or position traders. All right. They are typical swing traders or position traders. So as I've been telling you before, all right, the trading drill is very simple. Any professional trader will use the trading drill by all means. The setup, all right. I talk about this 100 times or 1,000 times. Is it 1,000 already? I don't think so. Okay, 100 times. Okay. So they draw. The trading drill is very simple. They are looking first for the trading setup. Then they want to validate the trading setup, all right? And then they implement a top-down trading method. And then they don't want to violate the market, They don't want to violate the trading triangle. This is the trading drill. Find a high probability trading setup, validate the trading setup, implement a top-down trading method without violating the trading triangle. So you see all the fine lines that I have on this chart, they will draw them at the beginning of the year. So let's go now to the 50-minute. Suppose we are day trading, we go to the 50-minute time frame today. What has happened? Look on the 50-minute time frame. Can we see any of those lines? Here is one. This is the high of last year. Yes or no? So today, in fact, yesterday you can see that the market was bullish. Price going up, boom, 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 boom. Look. As he reached the high of last year, they took profit. Now, what the price doing now on the 15-minute time frame? Can you believe it? All right, this is how the professional trading. So they are not trading blindly, my friend. They are trading around key level. Boom. They took profit. So if you are looking for the best overbought, the best, all right, overbought RSI, CCI, and so on, look for them around those key levels. So price going up for some time, boom. But look at that. Now here it is today on the 18th of October 2016. What the price has done, because there was this resistance here, price breaks above that resistance. Now it retesting here. Will it find a support and continue to go up? Decisions, whether day trading decision, swing trading decision, or position trading decision, are made around those 5 key levels. All right. Isn't it very interesting? Why do you need to know that? You need to know because you want to know how the Forex market function. The Forex market function, they probably go down from one specific key level, one of those 5 key level, and we go to the next key level. Or we'll go up for one of those 5 key level to the next key level. So you may be saying to me, George, I trade stock, I trade commodity, I trade gold, I trade silver. Is this is still valid for those financial instruments? Yes. You can do exactly the same thing for stock, for commodity, for future, for any financial instrument. So you see now, let's go for instance, I like the 2-hour time frame if I'm day trading. Look at this. Around the pink line, which line is this? Or am I getting confused? Let's go back to the yearly chart. Which one is the high? So in fact, I'll go back to the yearly chart. Here it is. The high of last year is the pink line. So the closing price is the red line. So here it is. That's the pink line. So let's go to the 2-hour time frame, because a lot of traders don't like to go too far on the higher time frame. They say to me, George, I don't want to go too far. All right, here it is. Let's go to the 2-hour time frame. Look, can you see a head and shoulder chart pattern in the vicinity of the high of last year? Here it is. The head, the left-hand side shoulder, and the right-hand side shoulder. Boom. What's happening here? After the bearish chart pattern, price is going down. Low, a high, a lower high, a lower high. And here we are. It's now escaping this bearish channel. Now, wouldn't it be nice for you also, as a day trader, as a swing trader, as a position trader in the Forex market, to trade like the professional traders? I think a lot of traders will say to me, George, yes. So I said this story before, one time when I've been trading Forex, because when we are talking about losing, I think talking about the number of times I have lost, I think I should be the number one. That's the way I see myself. All right? You may disagree with me, but I'm not talking about the amount of money I lost. I'm talking about how many trades I placed and how many of them were losing trade. And one day, this is true story, I placed one trade. So one day I asked myself, what should I do now? What should I do? So I decided to trade around one key level on the weekly chart. All right. So I see the price, it dropped down to one key level on the weekly chart. I see a bullish chart pattern on the lower time frame, and I just buy there. I tell you what, that day the price was going up the whole day. It couldn't break below that key level. Since then, my eye was open, and I said, well, I must well trade around those key level only. So the reason why I'm recording this video today is to help you also, and maybe this will help you to improve your Forex trading strategy. This is how the professional traders are trading. So you may say to me, George, I'm not a day trader, I'm a swing trader. Okay, let's go. So a lot of swing traders will stuck on the daily chart. I recommend that do not be stuck only on the daily chart. Yes, we can find trading setup on the daily chart, but do not be stuck on the daily chart. Push it a little bit to the weekly chart. Professional swing traders love the weekly chart and the monthly chart. All right. So if you have been swing trading and you only look for trading setup on the daily chart, move out of the daily chart, go to the weekly chart, start looking for trading setup. If you become more confident, okay, head to the monthly chart. Also, looking for trading setup, because the origin of the valid trading signal will come from valid trading setup. The higher time frame will provide you with the best trading setup. All right. So here we are. So we have all these lines drawn from last year. So you remember how I draw them: the high, the low, okay, the opening price, the closing price, and the median line. They are all here. All those 5 lines are visible, are clear, neat on my chart, on my weekly chart. So professional swing trader. So I'm going to place a line, a vertical line here at the beginning of 2016. So professional swing traders are looking for trading setup around those key levels. So here we are. So beginning of the year, what the price has done, look what it did. This is what I'm saying to you. This is what the price is doing all the time. Those are 5 key levels. The price will either move from one of them to the next level. You move down from one of them to the next one, or you move up from one of those key levels. Those are 5 key levels to the next one. So beginning of 2016, it moved down from here, the closing price. Here it is, boom, 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 down near the median line. Can you see that? How the price moving from one key level to another key level. So as a day trader, as a scalper, as a swing trader, you want to catch a portion of those moves. So during that time, as the price doing that, you want to give priority to bearish signal, because the price is in a declining channel on the weekly chart. Pay attention to the weekly chart channel. All right, the weekly chart channel is telling us a lot. Okay, as a swing trader, you want to check your weekly chart, channels. So here it is. So as the price dropped down, so beginning of the 2016, here it is, boom, 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 down. It break below this level here. Which one is this? Is that should be the opening price? Okay. Here we are. The media line is here. Okay. It drop it down. Look what the price down has done here. Pay attention to the price structure. There was this low here. Will you agree? There was a low here. And then we have this low also here because the price bounced up a bit. And here it is, it formed this low. Now, according to my friend, I want you to get this, all right? Enough of the blah, 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 or in the financial market, all right? I do care about what I'm saying here. I want traders to do well, all right? So if the financial instrument is going down, it must display lower lows and lower highs. But in a downtrend, what we are watching, what we want to give consideration to, are the lows. So here it is, from this lower low, lower lows, lower lows. Here is the last low. Remember this, the low before the last low is a psychological price level. Here it is. So if a financial instrument on any time frame, all right, from is going down, from a low, a low, a lower low, a lower low, if the price from the last low, but for one reason or another, it goes above the low before the last low and find a support, which is the case right here. So this is the low before the last low, yes or no? If the price return back above, so now this is how, if you want to trade reversal, all right? If it goes back above, okay, the low before the last low and find a support, or I'll move one line now, oh, all right, so leave it there. Here it is. So the price went down from this low. This is the low before the last low. This is the last low. Now the price returned back above the low before the last low and found a support. Look at this tall candle on the weekly chart. If he found a support, you see what the price did here? He breaks above it with this weekly candle. Now he retests it here. As a swing trader, professional swing trader understand this. So they are watching the low, a low, a lower low, a lower low. Now they draw it. Now the price breaks above the prior low. Now he breaks above it with this kind of here. He did it twice. So he breaks above it first, retest it here, and people buy it. This is a bullish trading setup for swing traders. Break above, retest the prior low. Am I making sense? Now, then they will implement a top-down trading method, a multiple trading method. For a swing trader, as I was explaining to a trader last week, it is impossible for us, okay, to disregard multiple time frame trading method or a top-down trading method. Price returning back above the low before the last low and finding a support. It's a bullish trading setup. Doesn't mean buy straight away, implement a top-down trading method. Here it is, people bought it, it went up. But it went down. Why the price came back down here? So after the price returned back above the low before the last low, which break above and retest, which is a bullish trading setup, people bought it. As the price was going up, it found a resistance at which level? You see, that's the media line. So you want to know where are those key levels. Professionals are not trading blindly. So you found a resistance there because they are aware of that resistance. They bought it, it went up to that resistance, which is the media line of 2015. And then they found a resistance there. They sold it back down. So this first candle here again is another breakable, another retest. They implement again a top-down trading method and boom, this time. You see that tall candle. But the reason why they are buying at the level of 8768 is because they understand the language of the price. A low, a lower low, and a last low. Now the price return back above the prior low, break above, retest. It's a bullish trading setup. Implement a top-down trading method. So this is how the swing traders are trading. You see that they bought it first time, you found a resistance here. Now, as they bought it, now after this bearish candle here, boom, it breaks above now the orange line. Now we went to the next key level. You see the turquoise line? You see how? So the first time they bought it, you found a resistance near the media line. The second time they bought it, you found a resistance near the opening price. From there, the price head to the now the closing price level, and then it went to the high, and now it's changing direction again. So if you are trading the New Zealand dollar, Canadian dollar as professional traders, what do you need to do now? All right. So at the end of so this, let me show you now, because I'm getting a bit fed up because there are a lot of. I'm not talking about traders that are watching video. I'm not fed up of traders that are watching a video. There is something going on YouTube. A group of traders do dislike the fact that on our channel we are talking to traders openly, showing traders exactly what they should do. And I know it. But I don't want to get into that argument, but I'm aware of it. But it doesn't bother me because I do not concentrate on competitors. I concentrate on my goals. All right? So there is a group of traders out there that think that we are saying too much, that we are revealing too much to traders, that we shouldn't do it. I don't see the point of it because if you have many traders that understand, okay, what we are sharing on YouTube, we will have, okay, efficient market, all right? So traders tend to lose more if the market is not efficient. So it's very important that the education continues. But there are people who do not want other traders to know what we are sharing here. One example, like I post a video about position trading, I post a video about multiple time frame trading method, and there are traders out there who dislike the fact that we are talking about those things. Well, now the question is, do you own the financial market? No. Now let's move on from that subject. So what's going on now, my friend? So now we see we went to the high of last year. You see? So are you getting it now? Are you getting the message? So now we talk about the low now here, okay? So in an uptrend, we focus on the high. Okay, so this is, so price went up, boom, see this high here, pull back. Now we have another high here. So this move from here to here, the last high is this one here. Are you getting it now? Are you seeing how the professional Forex traders are trading? Because a lot of money has been dumped in the Forex market, so much money, all right? Because traders do not know how to trade. So this is the last high, okay, all right? So this is the high before the last high. Remember, we were talking about the low before the last low. Here now we are talking about the high before the last high because the price starts changing direction. If the price goes back below the high before the last high and final resistance, it's a sell setup. So you see here, this is the high before the last high. So now the price break below the high. And now you see it's retesting a key level 9433. Now it's not ready yet. So at the end of this week starting of Monday 17th of October 2015, all right, when that candlestick bar, we'll wait for it to close. Next week we will be monitoring the reaction of the price because this is a very strange setup. After this candle here is closed at the end of this week, all right, come next Friday, next Monday, all right, Monday which date? All right, Monday the 24th of October, will be, as a swing trader, we will be monitoring, looking for opportunity, okay? Will it find a resistance here? Will it continue to go down? Because the reaction is that the price break below a key level 9433, after dipping below the high before the last high is bearish. Now if this candle is closed, next week we will implement a top-down trading method to sell it down. If there is no sell signal, we will not sell it. If there is, we will sell it. So you may say to me, George, I'm a position trader. I'm not a swing trader. All right, now, when it comes to position trading, I was amazed. I posted that video at 24 Stock Trader. What is a position trading? And there are people, in this world who want people to be in the darkness, who want people not to know things. I believe that the more people know, remember, if something is labeled confidential, I don't share it. If something is labeled top secret, I don't share it. If something is private, I don't share it. But something that I know myself, I will share it on YouTube. I do care about proprietary trading. I have my own proprietary trading tools. I do not share it with the public. Anything that is confidential, that is not mine, I do not share it. What is mine, that is not, I do not consider as proprietary, I do share with traders because I want traders to know. Very simple. So, So the point I want to make about position trading. Position traders look for trading setup on the quarterly chart. And again, the professional forex traders will trade around those 5 key levels. How long have I been talking to you now? I've been talking to you now for 24 minutes. We want to summarize this discussion because I want it to stay with you so you can do something about it, all right? Whether you are a day trader, swing trader, or position trader, you want to know how do forex professional traders trade, all right? But remember, the professional forex traders trade around 5 key levels. The high of last year, the low of last year, the opening price of last year, the closing price of last year, and the median line of last year. Those are the key levels around which the professional forex traders are trading. What are they looking for? They are looking for trading setup around those key levels. And when they see a trading setup which will generate valid trading signal, they always implement a top-down trading method. One more thing before we close this video, which is very important, is that professional forex traders do not use technical analysis alone. They always combine the technical analysis with the fundamentals, with the economy news that are changing the dynamics of technical analysis. So if you want to know more about economy news relating to forex, go to www.forexfactory.com. That will help you to keep tag on the economy news, high impact economy news that can change dynamics of your trading. This is the end of this tutorial. I think I've said enough. I hope you have learned something from it and will put into use to make excellent forex trading decisions like the professional forex traders. If you have any question or comment, put in a comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about how do forex professional traders trade. Happy trading to you all and speak to you soon.